be obviously tendering for these contracts going forward. This year, we had targeted for an order inflow of 2,000 crores, out of which we've already got 750 crores this year. So I think that we are on track to achieve the number that we had targeted for this year. Going forward, we'd like to maintain our book to build it almost 3 times, and we are on track to maintain that as well at the end of the year.
All right. So Atul, you have already said that are on track to achieve that target that you have set out for FY26. But just wanted to understand, Q2 has seen a lot of seasonal impact as far as companies in your sector is concerned. There's been prolonged monsoon, which has dampened, the sentiment over there. At least that's what we saw in the second quarter. But in the third and fourth quarter, could there be some follow-on impact, or do you think the worst is behind?
I think the worst is behind. Q2 historically has been a monsoon quarter, and seasonally, most EPC companies or infrastructure companies do see a dip in Q2. However, I think that, like you said, the worst is behind us, and we expect Q3 and Q4 to be much better.
Third and fourth quarter are expected to be much better, but also wanted your thoughts on orders that you're getting from railways. What is the visibility, particularly for railway orders, and any other segment that you're looking to diversify into?
So railway orders are quite strong, and they are forthcoming as well. We're also looking at contracts for roads. Like I said, recently we've got a HAM contract from NHAI for elevated corridor in Jodhpur. We are also looking at new sectors like railway signaling, tunneling, etc. And hopefully we will be able to enter these sectors in the coming quarters, which will enhance our offerings to the railways as well as the other government agencies.
That's about segment, especially the railway sector. But Atul, just wanted to understand one more thing. You recently raised a fund by QIP, right? So just wanted to understand, how did you utilize that fund? Is fund allocation still pending? Where all is the money going?
We did raise a QIP about 18 months ago. This was primarily used to retire some debt and also for general corporate purpose. The fund has been fully utilized as per the shareholder approval. It also eases the balance sheet. Our debt to equity ratio is quite below 1, and our current ratio and other ROC etc. is also quite good. And we expect to be able to maintain that kind of debt levels going forward as well.
So that's as far as your debt is concerned and the recent fundraising that you did. But Mr. Tantia, any kind of expectations that you and the industry is building in ahead of the union budget on the 1st of February?
Like I said, we expect that the infrastructure spent by the government will continue to be strong, and from both the railways as well as the NHAI and the road agencies. And that was what it was in the last couple of budgets as well. And this budget on the 1st of February also is expected to be along the same lines. We do expect the same kind of momentum and focus on infrastructure to be maintained by the government.
So good infra momentum is what you're expecting. Understood, those are the budget expectations. But just on your order book, I wanted to understand, December has already seen a significant amount of orders coming in. So do you think, is that it, or Q4 also we could see this momentum continuing? Is that something that you're looking at, or do you think most of the orders are already in and now the focus is going to be on execution?
No, I think that you have to continuously bid for contracts. This is a continuous exercise that the management does participate in. It's not as if the orders inflow for this year is already done. We have already bid for certain contracts, which we are quite hopeful for. And hopefully, if it does come in our favor in Q4, then we will announce it to the exchanges as well.
Understood. Mr. Tantia, also wanted your thoughts on margins, because EBITDA margins have risen steadily from about 11-12% in the September and December 2024 quarter. They've risen to about 12 to 14% in the last 2 quarters. Any guidance that you can share for the margins without giving a number? I believe you are on silent period, but directionally, where are margins headed in the medium term?
So our margins, we have historically guided to be north of 13%. So 13% is our hurdle rate. And we expect the margins, full year margins, will maintain around that number as well.
Oh, so that's about margins. But Also wanted your thoughts on, we've already spoken about capex, but just wanted to understand if any more capex is coming in FY27 and any particular utilization that you're looking at, any specific projects where that could be utilized?
So recently we have set up a steel girder manufacturing facility in West Bengal, which is about 10,000 metric tons per annum. We are expecting to enhance that capacity going forward as well. That will be a significant capex. Like I said, we are also looking at sectors like signaling and tunneling, which will require some capex from our side. Once those plans are finalized and something is done, we will definitely come back to the stock exchanges and the investors and announce those plans as well.
So that's the visibility when it comes to order wins, government capex, and the margin outlook going forward. Mr. Tantia, thank you so much for taking your time out and joining us today morning.
Thank you.
With that, we need to slip into a very short break, but more news and updates will continue on the other side. Don't go anywhere.